and losses and write-downs in global financials, forcing central banks around the world to weigh in.
With the global environment slowing across the world, they've already done enough in terms of putting liquidity in the marketplace. Now we want to start seeing recognition of what's going on in the real economy, and if things are slowing, then it's appropriate to cut rates.
And speaking of cutting rates, South Korea's central bank becomes the latest addition to cut interest rates here in Asia. The Bank of Korea lowered its 7-day repurchase rate by 25 basis points for the first time in 4 years. All 18 economists that we surveyed expected the central bank to keep rates on hold today. Now, for more on that rate decision, I'm joined by Daniel So, regional economist and also currency strategist at Forecast, and he joins us from Singapore today. Daniel, tell me about that. Well, how big of a surprise was this? None of the economists that we talked to expected it.
It's not really a surprise. After the coordinated move by the global central banks to cut rate, they actually offer BOK an opportunity, an excuse to lower interest rate. And they have been wanting to do so for a long time, but because of the excessive fall in won and inflation risk on the high side, so that's why it has deterred a rate cut all along.
Okay, well, I guess the point of this, the Bank of Korea Governor Lee says that the decision will help ease jitters in financial markets. Do you really share that optimism? Is it going to help? It didn't help in the U.S.
Not really at the moment, but the coordinated rate move is going to be positive because it's more of a psychological issue now. There's a total loss of confidence in the foreign exchange market, in the equity market. And the more important thing about the rate cut is to help in the construction industry, because in South Korea, the construction industry is suffering from some problem, and the SME are struggling in funding problem, hedging instruments, and higher costs. So the South Korea want to attend to all these micro issues first. And showing up confidence is also very important. So the South Korea decided to go ahead, especially when the global central bank endorse the rate cut worldwide. They give them an opportunity to do that without inviting too much mounting speculative attack on the currency market.
Yeah, well, let's talk about the currency, because the won is certainly feeling this rate cut decision right now. It's already the worst performing currency in this region this year. What's the outlook for this currency? Is it just going to go one way, which is weaker?
Before the coordinated move and before the Japan may agree to help Korea to help to solve the U.S. liquidity squeeze in Korean market, I would say it's a one-way move, because exporter has withdrawn from the market and is in a state of disequilibrium, and speculative attack has been mounting, and South Korea can't do much. Practically they can't do much to curb, especially with a stronger U.S. dollar environment. But right now, if Japan managed to step in and confidence is restored, we may see some pullback, because it's definitely over excessive, and the market knows, but there's nothing the policymaker can do. So everyone is very nervous, and there's lack of offer in the market, so everyone just chasing after the US dollar.
Okay, so what's your advice for the won, people trading the won?
Most of the traders right now will be staying on the sideline, and because they are waiting to see more development after the coordinated effect, and this may be, as I mentioned, positive to the psychological confidence of the global equity market. So the bottom may be near, but this also depends on South Korea credibility, because with the fall in the won, inflation risk is on the upside. It may rebound strongly. So this may give speculator another excuse to push the dollar higher, the dollar won pairing higher. So it is a very nervous market now. I will expect this currency to consolidate between around 1,100 to 1,400, around 1,400 level for the moment.
Okay, that's the price range you're looking at. Now, quickly, Daniel, do you expect another rate cut maybe from South Korea anytime this year?
Unless the global market, the global central bank endorse further monetary loosening, it's unlikely for South Korea to endorse a further rate cut. The domestic slump is an issue, but inflation is going to stay adrift for a while, and they will not dare to risk. As I mentioned, the foreign exchange, the excessive fall in the won is a major concern, so they will not dare to make any relative movement, huge relative movement against global interest rate, and invite an unnecessary attack on the currency before they restore confidence and credibility.
Okay, Daniel, we'll leave it there. Thank you for your time today. Daniel So, regional economist and currency strategist at Forecast in